All right, welcome back for another episode of Carnivore Trade. Today is Monday, November 13th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading, alerts, analysis, and live day trading. Anyways, let's get into it today. So markets here, basically flat as a pancake, at least on the spiders and really the Russell. Triple Qs here down 61 cents, nothing crazy. Dow up about 1/5%. So again, pretty much a split tape, very, on the flatter side. A lot of things up, a lot of things down. Take a look at Tesla today, up 4.5. Nvidia having a decent day there. And then you've got some other sectors struggling. Transports are struggling. Energy okay. Banks lower on the day. But overall, mostly a mixed tape and kind of a flat day. You got semiconductors down here. In any case, markets are holding up ahead of CPI. You can see we gapped down this morning and then take a look at the volume here on the spiders. So 43.5 million shares. We close in 13 minutes. That's really light. Like that's like Thanksgiving holiday type stuff, which is coming up soon. But in any case, very, very light volume. And when you see that happen, they kind of just float it higher, right? So you just get passive funds, retail, and algos buying. And when there's not a lot of volume, you're generally not going to see a lot of selling action. It's just kind of the way it works. We did have a little bit of a decline in bonds. So earlier, we see the ZB was down quite a bit, and that did drag the markets down. And then as soon as the markets opened, right at 9:30, ZB found a low, and guess what? So did the spiders. So again, still trading positively correlated, very much positively correlated with bonds are the market. And you can see we stalled out. We're right at this trend line here on the spiders as well, and we're going to close pretty much right on that from the looks of it, barring a little pop or drop in the last 10 minutes or so. But again, it's all about CPI tomorrow, and that will tell us a lot more. We are trading, again, up into CPI pretty substantially. So again, 409.21, all the way to the 440 handle. So a 300-point move on the SPX leading into CPI. Could you see some buyer exhaustion regardless of the number? That's certainly possible. Again, when you're up big into a volatility event, these things can happen. Speaking of volatility, the VIX, it is green today. So this is probably just event vol. It's up, 4%. Well off the highs, though. So not really seeing a lot of fear out there. There's the room for it to drop and, drop down to that 13 handle. It's certainly possible. But right now, I've got for this week, max move is right around 444.50. That's the original target I had when we were back here. If we had followed through, we didn't. And obviously we went lower, but that is kind of really max move for this week. Especially, I think if we have some type of euphoric pop tomorrow, or even continuation into Wednesday, I think we drop into the weekend, into Thursday, Friday. If not, we kind of just grind this trend line. We'll see what we go here, but the big line in the sand is 433.01. You get a daily close below that. I think that definitely opens the door for more backing and filling. I would think the market's going to want to retest that 200 moving average at some point. And if you're a bull, you kind of want that. You don't want to continue to just get more and more overbought. That's unhealthy. And that's how you can get very sharp sell-offs. But for right now, that's kind of the max move. There is a call wall on the SPX at 44.50. I've got my line here marked at 44.61, which is the red bar high. Again, it could always get overshoot, but there is a call wall there, and that will be in play till the end of the week. That's why I say it's likely max move. We'd have to have something really big, to happen to break that to the upside. So, but that's what the market's at right now. Triple Qs here, again, stalling out just a little bit here. I think big tech is a little long in the tooth, especially going into an OPEX week, and I think we'll start to see that underperform just a little bit here. You may see banks and energy, things like that, start to rotate, get a little bit of rotation. Right now, 380 is a good psychological level, and again, that goes all the way back to 2021, the end here. So these pivots right in that area, we tried to break above it. We could never really confirm, and we back tested on the downside, and we kept continuing down into October. So now we're right back there again. We might overshoot a little bit. There's a pivot high here at 380.83. So just above that, that level should coincide with that 44.50 area on the SPX. Then, of course, if you get above that, there's a gap here at 382.79. So a lot of areas we could be looking at here on the Qs. I just find it a little bit easier at this point to go off of the SPX or the spiders, as those levels are a little bit clearer than on the Qs, but that's what I'm watching. On the downside, if we do take out, I'll just say 369, so that was that green bar low, then that starts the correction for the Qs, 360, and then of course that big gap there, say 357, and then you have the pivot low around that 354, 355 area. IWM is green on the day, started lower like everything else, but not a great move, right? So again, still inside of that sell-off from Thursday, barely bounced on Friday, and we had 1, 2, 3, 4 down last week in a market that was trending up and trading much higher. We had a red week last week. We talked about that. We rejected this trend line after going right into it. So for bulls here, for IWM bulls, you need a higher low. So you've got room for it, but you've got to put in a higher low here to go and take out this pivot high, and then you can work your way up to 180, and then that's 200 MA. In the meantime, nothing to say it can't go back to 165 though. So if you come back up here, you put in a lower high, it can go down there. So just be aware of that. With the Russell, small caps still under a lot of pressure here. The Dow got up to the area we talked about, 344.30 on the diamond. So we said 344.50 area, 345. Again, could it get up there a little bit higher? It certainly can. Nothing to say it can't. But right now, that's kind of the move. That's really kind of it that I see for the Dow. If you overshoot, we'll say this red bar here at 347.66, but that's really all I've got for the DIA right now. But again, nice move here, getting back above that 100 moving average. And we'll just leave it at that for now. Again, CPI will tell us a lot more and more. More importantly, the market's reaction to CPI, of course. Semiconductors inside day here, down just 45 basis points. NVIDIA is green. That is kind of skewing the tape. We talked about that a lot. You see the stocks there, down 87 basis points, but NVIDIA is up 0.5%, so SMH is only down 0.5%. Or excuse me, NVIDIA is up 1.5%. Now it's only up 1%. Anyways, I'm going to confuse myself and you guys. We're at a resistance here on the SMH. We'll leave it at that. 157 area. If this consolidates, it can go higher. If not, you got to pull back to this trend line. If you get through that, you've got the gap here. You've got another gap. So we'll watch those areas here. And then you've got all these moving averages. But again, semis on the weaker side here today, despite the strength in NVIDIA. Cloud actually managing to scratch out a gain, or at least come back to the flat line. That was a little bit weaker earlier on. But it's hanging in there now. Let's see, we haven't quite filled that gap, 366.74. It also essentially coincides with that previous high. So IGV is still holding up. Again, I'll just give it the upside bias to 366, 367 right now in the short term. And then, of course, the double top at 371.56. Dow transports here on the weaker side, so down 1/3%. Pattern isn't terrible, right? So you can make a case you've got, and we just parallel this. You can make a case you got like a little minor bull flag there on the daily. What I don't like, and I've told you this before, I don't like that you're below that 50 MA and the 200. So I think there's a higher percent chance this rolls over and has to put in a higher low before advancing. But right now the pattern is okay. And again, we'll just leave it there for now. As long as you stay above that 20 moving average, I think it's okay. But a little inside day there, and again, we'll see what we get tomorrow. Let's flip over to interest rates here. So the 2-year, again, we talked about this earlier. Rates were higher earlier, and that was bringing the market down. The market did gap down again. We had the Moody's thing on Friday afternoon, so that makes sense that they would do that after the close. It's not an actual debt downgrade, so I just want to be clear on that. It's a credit outlook downgrade. If they actually downgraded our debt, we probably would have sold off in the after hours, but they did not do that. So just important distinction to make there. But you can see the 2-year back checking to this trend line, and now it's pulling back in. We did close above this red bar though last week. If you get back above 510, especially on a daily close, then things get interesting for the 2-year. But it is pulling back right now. There's the 5-year, not quite getting back to this trend line here. We could probably adjust that just a touch, maybe a little bit lower. But again, pulling back in after trying to rally up. I still think yields right now, I think they've shaped up a lot better. We'll have to see what we get tomorrow with CPI, moving that around. But the 10-year here, I don't know. It looks like it wants to go back up to 480. The same thing with the 30. I think this wants to go back up and test, 492, 5%. You do have the lower low there with the lower high, but rates are still holding up pretty well. And the trend is up now. If they do head lower, again, it's 4.45 on the 30-year and, 4.35 on the 10-year. Those are the big levels I'm watching, but they definitely have firmed up a little bit despite being red today. So, again, we'll see. The market's reaction to CPI will tell us really everything after tomorrow morning. XHB here down 41 basis points. Nothing terrible, though. This is actually okay. This, I would say, is a much better pattern than what we're seeing, what I just showed you on the transports, because you're above that 50 moving average and the 200 and the 20. The only one you're below is the 100. And this pattern is, see how it's at a 90-degree angle there versus the transports where it's kind of like downsloping to a degree. This is much stronger, and you have see this higher high there. So this is what I would call, a higher percentage bull flag versus the DJT, which we're seeing, I would say, is much lower. It's much closer to 50-50. So just a little distinction to make there if you're, looking to learn these patterns a little bit. But in any case, XHB is holding up. If we get a pop, I'm still going to say it can get to, 79, maybe even 80. There's still a lot of trend line resistance up in this area, though, but you are consolidating beneath it, which is a positive for the XHB right now. And I like that you made a higher high to these two previous highs. So that chart's in much better shape. However, the thing I don't like with a lot of these is look at these gaps here. They're ugly and they're just not healthy. So again, it'll all be down to the spiders. If the spiders break down, everything breaks down and retraces. But right now, that pattern in a vacuum is much better than some of the other ones like VNQ, right? You have an up move and you could make a case you're pulling back here for another advance, but look at the pullback. Look at how steep the pullback is. And you're basically just holding this previous double bottom level. So in much weaker shape, it's below the 50 MA. The only moving average is above is the 20. So it's going to need a lot of help from the market to get going. And you're trying to hold on to this gap window. If you get through that, it's down to, $73 again on the VNQ. So just be aware of that. XLF in decent shape, right? So this one looks a lot more like XHB. Up move, and it's more of a right angle. So if this continues to consolidate, you can push up to 34.50. What I don't like is kind of like the KRE. Again, it's holding this level. It's getting a nice bounce, but barely green on the day. And again, I hate that. I like to look at XLF, but I don't like that Berkshire makes up the majority of it. So I do like to look at KBWB from time to time. There's an ETF that trades off of the large bank index. I just like this a lot better. But KRE, again, it's holding up. We'll leave it at that. They can still get back to 44, 45 if it puts in a higher low. If not, it needs to hold 40. KBE, a little bit better shape here. Again, same kind of thing. You can get back to this double top if this low can hold. But you don't want to lose 36 because that would be a big negative. And then the broker dealers here, again, nothing terrible, nothing great. I'm trying to put in kind of a bull flag pattern there as well, but it needs to firm up a little bit and get through 490. And then I can go to 500. Crude having a decent day today, so I'm still not in love with the pattern. I do like it. It's getting back above the 200 moving average here. But you could make a case here, unless you get back above, $80, or unless you get back above even really 81.05 on a daily close, you can make a case that this is more of a, I was just going to do that exact pattern right here, but you can see right there, you can make a case that this is more of a bear flag type pattern here, right? So just be aware of that. I'm not saying it is yet. It's still a little immature. And I would have preferred, I know we talked about, there's a closing bell. Hopefully that wasn't too loud. I know we talked about the 618, but I would have preferred an immediate reaction. I don't like how it took 2-3 days to get going. So it does suggest a little bit more weakness. We'll see how it reacts at this trend line here. But the big level, if they would prove this wrong, would be if you close above 81.05. That would negate this entire breakdown, and that would give me more of a neutral stance on crude. But right here, we'll see what it does over the next couple of days. I still am not doing anything with it on the neutral side with that one. XLE getting a bounce here. That still's got resistance here at 85 to 85.50. So we'll see what that does if and when we can get up there. XOP trying to hold that 200 moving average, trying to work on a minor higher low. If it can push up, there's a gap right here at 143.69. And the OIH, the one I like the best out of all of these, up 0.75%. Again, I like the bigger time frames more so. I like that monthly. If this can just hold up here, this is going to 500. So OIH hanging in there very nicely. CCJ outside move up here. This is going to 45. So again, they had that weekly breakout, and we're going to look for that to get up into that 45 handle. That's really the only next level I've got for you right now. URNM, nice move there. I still like the weekly chart of that as well. I just would like it to do a little bit more consolidation, but it's fine for now. Nat Gas having a nice bounce after the down week last week, holding the 50 moving average back above the 20. This can continue higher. You got that gap window at 340, and then the gap fill at 347. So those are the levels I'm watching here over the next couple of days on NG. Dollar index holding up okay, but it did pull in off the highs. You still have an inside bar here. Big down move, 1, 2, 3, 4, 5, 6 inside. Got to get above these moving averages. Got to get above 106.22. I would not rule it out that it can do that, though, even though it has an inside bar pattern. Again, we have CPI tomorrow. Anything can happen, right? We get a hot number, this will go higher. And if that happens, then dollar is back to doing weekly consolidation, weekly bullish consolidation. So dollar's been a tricky trade here. It has not. It's given us a lot of conflicting signals, and that's why I'm just neutral on it. But if this firms up, it can still go higher. Just be aware of that. If it rolls down, it's going to 104 here in the short term. But dollar index pulling in, and again, we'll see what we get tomorrow with CPI. Gold here holding that trend line for now. So nice bounce there. This can continue up to, we'll say 1985 to 2000. That's going to be your short-term level there on gold futures. If this consolidates, it's going to go down to 1900. And then we have silver here. Nice dip here, and then came all the way back to green, finished up a third of a percent. Held that green bar, held the 22 handle. We'll see. Maybe it was a fake down. I don't like what it did on the weekly, though. If it's bullish, it should not have had to close below that green bar on a weekly. But short-term, it's getting a bounce. We'll see where it ends up at the end of the week. Platinum, nice bounce here. The low may be in on this. I'm watching this for pattern. The only reason I'm not jumping in on it right now is because platinum is thin, and a lot of the time it can overshoot. So, just be aware of that. But we'll have to watch this for pattern. But I do like the move. I do like the level, and it's hanging in there nicely. Palladium here getting a bounce as well. A lot of volume on that sell-off. That may be a low as well, but need to watch this one for patterns additionally. And especially if you can close above that 200-month moving average by the end of the month, and maybe let's just say you close up at 1120. That would give you a pretty good looking tail, and it would be on pretty good volume. I mean, all that is basically a retrace to this breakdown area. So I would imagine that would be a pretty good looking candle there for palladium. I'm watching it though. Copper here, nice outside move there for copper, up 2 1/3. So big retrace there. I'm still not bullish on copper, but big move there. We'll see if we can get to that trend line over the next couple of days. Bitcoin. So pulling back just ever so slightly over the weekend. I still think this is just waiting on the ETF news. I wouldn't do anything with it until then. Some of the alts are holding up much better, as we talked about. ETH got that little outside move. Look at XRP today, another higher high there. So Polkadot pulling back in, Litecoin, Doge all red on the day. Solana pulling back in. This is way overbought. But again, Bitcoin hanging in there. I think it wants to go to 40,000 on the ETF news, but I can't chase it up here at this point, but just pulling back and believe it at that. If it does get below, you start to get back below 34, you start to get below this pivot here, then it could really start to pull back. But until then, it's still just hanging in there for now. So again, we'll just give it the benefit of the doubt. So spiders here closing down 42 cents. So a little bit of a fade into the close. Let's not make a lot out of it. Minor little kind of almost like a spinning top type candle there. It did close below that trend line. So again, does it mean a whole lot? Not really. But we'll see. It's all about the CPI tomorrow. Again, if we continue higher, this is kind of your max move this week. And if we start to pull back, this is the level that I think bears need to break, 433.01. You get below that on a close, and I think that starts the correction here. kind of going into the end of the month there. So anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I will talk to you guys all tomorrow.